Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what is going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, and you can see the code on the screen there. So Giovanni Incasta says, Jeff Booth just broke my brain on simply Bitcoin. So let's get into this. I want to see what he has to say on this thread here. It says, this wasn't your typical Bitcoin interview. We're living in an age where debt is collapsing faster than we can handle. That's the design of the system. And to make things even more terrifying, the smartest economists in the world are realizing our entire system is built on lies. The 43 million Bitcoin math, so Booth revealed a calculation that will blow your mind. All assets in the world equal 900 trillion of purchasing power. Divide that by 21 million Bitcoin and you get 43 million per Bitcoin. But here's the twist. That's just the starting point. Bitcoin isn't priced within the failing system. It's outside of it. If you had a small percentage of Bitcoin, that would be enough to live forever, because prices fall forever in a true free market. The 600 trillion debt bomb, this one shocked me the most. Booth's research showed under those 900 trillion in assets sits 600 trillion in debt. If that debt goes insolvent, all assets become worthless. Booth's reaction, we're almost at the end of the days for our system. The problem, governments can't let it collapse, so they'll print infinite money instead. This creates a death spiral of centralization and control. So why not gold? Why gold went nuclear? Booth explained what really triggered his Bitcoin awakening. Gold isn't actually audited every 10 minutes like Bitcoin is. If gold traded at free market prices, it should be $80,000 per ounce. But here's the devastating truth. Gold gets centralized and captured every single time. For 5,000 years, humanity has tried honest money and failed. The powerful always co-opt it through derivatives and manipulation. For someone seeking true monetary freedom, gold's track record felt impossible to accept. That's when Bitcoin clicked for him. The natural deflation reality, Booth revealed the economic truth they don't want you to know. What if prices naturally fell 5% every year due to productivity gains? Every human being on earth would get richer by 5% annually. Inflation only comes from one thing: manipulation of money. The natural state of free markets is deflation, things getting cheaper over time. We've been programmed to believe inflation is normal when it's actually theft. We are ready to embrace the world where abundance is the default. The AI deflation explosion. Both Booth dropped this prediction about artificial intelligence. AI will create massive productivity gains that eliminate millions of jobs. In the current system, this means unemployment and suffering. In the Bitcoin world, prices fall by exactly the rate AI replaces jobs. You don't need the job anymore because everything becomes infinitely cheaper. Booth calls it living in abundance where your purchasing power grows forever. The problem is solved if you're measuring in the right money. The final choice reality check. Booth revealed the ultimate decision everyone must make. You can measure your wealth in the centralizing fiat system that steals from you, or you can move to the decentralized Bitcoin system that serves humanity. And these revelations expose the new reality. Every government will try to co-opt Bitcoin, but many Bitcoiners will sell out for paper gains. But the nodes, the real Bitcoiners, will keep the network free. As a result, two incompatible systems are at war. I'm not going to keep going. This goes for a long time. My question here is, I don't know if I necessarily believe what he just said here. These are the things that I would say compete with what he is talking about. Artificial intelligence is basically saying that it can grow infinitely and things will become infinitely cheap in a world that has resource constraints that we may or may not be bumping up against. As governments try to keep the system alive by creating a ton of paper money. What makes you think that people are going to run into Bitcoin and not something else? And if inflation continues to go up, what's going to keep people in Bitcoin, which has no relative value? It has no relative value. So what happens is people will liquidate the things they don't need, and it will go towards the things that they need. So what are the things that they need? And we're actually seeing this in everything, I think. What's going to happen is the things that create wealth in the system is where the money will flow into. Oil and energy are things that create wealth. Commodities are the building blocks for what wealth is. So commodities and energy is what makes homes, cars, and everything else that we use, computers, television sets, chairs, everything. So if things become incredibly expensive, why would people run into an asset that is unproven and maybe liquidated for the things that people need? Because that is not needed. I think that there are problems with the design of Bitcoin, as everything in this world that has been man-made has gone to zero. Currencies are made by humans. So is Bitcoin, which is, quote, a perceived currency with perceived value, with perceived whatever, backed by human engineering. Human engineering, there's always faults, there's always problems. Nothing is perfect. Gold, silver, platinum, palladium, uh, and other things in this world, well, those are elements on the periodic table. They were here and will always be here. We simply transfer those things from one family member to another, or we trade it and buy something else where another family member gets it, or maybe someone outside of your family. What makes you think that technology, which rotates pretty quickly, and Bitcoin being a part of technology, is going to stay forever? I think that is really, I don't think it's going to stay forever. I think it's going to get transferred out by something else. And it could happen very quickly. Just like Sony Walkmans, just like CDs and DVDs, its cycle is very short-lived. It's a short cycle thing. So I'm not as bullish on, say, human-created, self-perceived Bitcoin, but I am much more bullish on the things that are the building blocks that people need in society to build wealth. So that's the way that I discern the difference between the two, I should say. Endgame Macro says the continued slide in the U.S. drilling rigs are now at the lowest since 2021 and underscores a structural vulnerability beneath the surface of energy markets. Despite oil prices spiking on geopolitical stress, domestic production capacity is quietly eroding. This is not just a function of price, it reflects capital discipline, geological exhaustion, and Tier 1 shale zones, and regulatory and ESG driven investment constraints. In effect, the US is walking into an energy security trap. Spare capacity is shrinking just as geopolitical risk premia return. The feedback loop is dangerous. Reduced rig counts means tighter future supply, which amplifies price volatility and narrows policy flexibility. If oil shocks persist, the US may find itself without a credible supply side cushion, forcing greater reliance on strategic reserves or foreign imports. Markets focused on CPI prints may be missing the longer term reacceleration risk embedded in energy inputs. That's well put by Endgame Macro, and that's exactly the way that I think and what's coming. And what I do is this is the whole supply side here, and your demand is the system that's unable to stop printing because of the debt in the system. It's the design of the system that's the problem, where money has to continually come in. And the only thing that's counterbalancing that is your energy supply, which grows your gross domestic product. And there's your imbalance. Now, a lot of people are running into Bitcoin. Bitcoin only existed during a boom of the NASDAQ. And in my opinion, that's all changing. We could see Bitcoin go to zero and completely bust the system if we get what I think is coming in increasing interest rate environment, which is going to really put pressure on the NASDAQ and growth stocks. And I'm not sure exactly how Bitcoin's going to perform under that condition. I don't know. Hasn't seen it yet. And there's the rig count diving for Baker Hughes total rig count. I do think this is the complete bottom, 555. That is way, way down. Theory Bros says, I think he means worrying to see that at a time the world gets more insecure. Uh, is relaxing its gas storage obligations to please Germany. That has a track record of being wrong in energy for the last 20 years. Look at 2024 and the inventory levels of natural gas. Now look at it today. I mean, that's way down. So what makes you think that we're going to come all the way back up here? What if we have supply disruptions with the crisis that's coming? This could get real interesting real fast. And I'm glad I live where I'm at. We don't get too cold. I mean, we get cold here, but not too bad. Tavi says, oil now surging for geopolitical reasons, but this is an important reminder for the following. Sometimes you can have the full foundation of a thesis in place, yet the catalyst that sets it in motion often remains unclear until it happens. That's likely the case with the bullish setup for the energy sector. Oil and gas producers have been languishing at historically low valuations for an extended period of time. One way to see this is by looking at the energy sector's current share of the overall market, which is at historic lows. In the 1980s, the sector accounted for about 30% of the market. Today, it's down to just 3%. Some people attribute this to a permanent structural shift, and I think there's some truth to that, but it's likely a combination of factors. While we probably won't return to the highs of the past, it doesn't make sense for the sector to remain so undervalued. Today's energy companies are extremely profitable, and I see them as one of the most attractive opportunities for both macro and value investors. And this is, over time, the energy sector as a percent of the S&P 500, and it is really low. Now, what I'll say is I think some people have this incorrect. I'll explain. Look back at history. We bottomed in interest rates here in the 1940s. So we had a sideways action from 26 in the 30s. And then from 40 onward, we can see an upward trend, 18, 19, 25, 28, and 30%. We peaked in interest rates in 1980, early 80s, and started coming down in interest rates, which money came out of the energy sector and bottomed. I think that the energy sector is just delayed behind interest rates a little bit. So as interest rates continue to go up, and I think we could see them go up dramatically, I think money's going to come back into the energy sector. And I actually think that this could maybe go back up to, maybe we get somewhere to 20 to 30% at the end of this bull market. Now, when will that occur? I don't know. I think it's going to take time. This is not going to be in a couple of years, guys. I think this is going to be the biggest bull market in history. It will be bigger than the 70s. It will be bigger than the 2000s. This is going to be the big one. Now, could it be a game-ending big one where the currency collapses? It could. It's possible. Where interest rates go to levels that bankrupt countries? Yeah, very well could. And right now we're sitting kind of real close to a bottom, and people just haven't wrapped their mind around it yet. They're all stuck in the old paradigm. They're stuck in the declining interest rate environment where this peaked and was declining the entire time. This was just a little bump in the road as we bottomed here in 2020. This is going to be your upward move, your pullback, which is These are upward facing patterns. And this, I think, is going to be a downward facing one where we really start to take off. It's going to be a fun ride. Japanese private sector deleveraging and asset price deflation are done. One of the biggest bubbles in history. This is Japan Urban Land Price Index since 1955. This also is where the demographic of homebuyers peaked, and it was declining for a long time. So we'll see if this is a bottom and starting to turn on up for Japan urban land prices. Global markets investor says you can't make this up. U.S. job numbers have been revised down by a massive 219,000 so far in 2025. Here's some other revisions here. April, March, February, and January making up the 219. 22 out of the last 28 months have been revised down since the beginning of 2023. So they're overstating the job numbers. You know what else they're understating? They're understating the deficits being run in oil. So yeah, I think they're completely playing with the numbers here. They're playing with job numbers, and they're also playing with oil numbers. They are understating, they're overstating oil production, and they're understating, or they're overstating job numbers too. Correct. Just a reminder of Redfin's biggest seller to buyer gap ever talking point. Medium sales prices are up 1.6% year over year, and the median asking price is up 5% year over year. Just an FYI, even though we've seen data saying, oh, there's never been more sellers than buyers, the prices continue to go up. AI will fix everything. Cool. Will it also pay taxes, fund Medicare, and mow your 85-year-old grandma's lawn? Demographics still drive the macro. Fewer workers plus more retirees equals higher inflation risk, even in this AI fantasy. Aging demographics may be stagflationary. This is the US dependency ratio versus consumer price index. The dotted lines are the UN forecast as it goes back up. So we've got more people getting older versus in working age. And the demographics suggest that we could be in a stagflationary period. Here's XLE, which is a ETF for energy. This is one heck of a lower wick on the 3-month candle, says Casper. When XLE energy sector crosses 100, that is a big tell that we are going to see higher prices. I think we're going to see higher prices irrespective. We're underneath the cost curve, and we've got a lot of problems going on. So yeah, I think we're going to break higher. A lot of stuff has already broken higher too. Gold, silver, platinum, copper's broken out of its consolidation. So what makes you think that oil won't break out? Pretty sure it's going to break out if everything else is broken out already. Here's Peter Lynch. He says, if you invest $1,000 in a stock, you can lose, the most you can lose is $1,000. But you stand to gain $10,000 or even $50,000 over time if you're patient, says Peter Lynch. That's your asymmetry. And that's exactly what I look for, is asymmetry. News-driven price moves don't last. That's the quote. He says, energy analysts are skeptical the oil price rally has legs, even though we're witnessing the beginning of a prolonged Middle East war. If it's just the news, yeah, maybe the rally will fade soon, but look at the positioning. As my buddy Jason P138 has shown, commercials are buying crude like there's no tomorrow. You and I can sit and opine on probabilities and become armchair experts on Middle East politics this weekend, or follow the commercials, the people with experience in trading physical barrels as well as futures. 2 of my breakout signals triggered this week. The setup reminds me of March, April of 2023, and the setup here reminds me of 2001 into 2. Weaker dollar is in alignment with the weaker dollar back then. We have the same fractal, this pull up and pull back as 2001-2. So it's coming. It's coming. And we're going to see probably a big move in crude oil. Gold's our leader. Gold's been flying. So what makes you think that crude oil is not going to fly with it? That's what I say. C says the highest level of smart money buying since 2013. Maybe they see the same fractal comparison as I do, or maybe they think that this is a beginning breakout, which I do think it is, in oil for WTI and also Canadian crude. Depressed options trader says the most under the radar bull market happening right now is rare Pokemon cards. We're talking 1,000% plus gains within the last 6 to 12 months. $10 cards selling for $100 plus, $100 cards selling for $1,000 plus. Some of my cards I bought for $50, I'm selling for $2,000. 59.99 box sets for $2,500. You know what that screams to me? That we're at the top of a liquidity market, maybe, or we've got too much money in this system, and it's just sloshing around all over the place. But yeah, looks like that's going crazy there, and I didn't really know about that going on. Gold, nothing more bullish. A massive 50-year in the making ascending wedge breakout. One of the most powerful charting patterns when broken to the upside. And gold has done just that. Huge upside to come. Silver miners, juniors are about to go ballistic next. Get positioned. Well, I've been positioned, guys. I've been sitting in this stuff. It's all unwinding right here. It's all being realized. Gold, silver, platinum, the mining companies, oil. This is wave three, and we're in wave three of wave three. So we're starting wave three of the shorter cycle. And in the longer term cycle, we're also in wave three. For gold, that's the case, and for some of these other commodities. This will be the biggest move that anyone has seen in any market. The 1970s was wave one. Wave three, if you know Elliott wave, is the largest wave, big boy wave. And we're in wave three of wave three. So this is where gold's going to rip. Silver's going to absolutely dust things. Platinum's going to go ballistic. Crude oil is going to go multi-$100. And we're all at the beginning of it right this second. What is going to be the driver of it? Money printing. It's the first thing that we went that Bitcoin Jeff Booth in the design of the system where they have to print money to keep the system alive from debt from imploding. That's what's going to drive all this. It's not gold. It's not silver. It's not supply demand per se directly. It's the currency system ready to get blown out of its value and people then figuring out that's happening. And then as the conditions get pressured onto those people, they're all going to react. And right now, they haven't figured it out yet. They don't know that the conditions have changed underneath them. They're still trying to learn or research. They'll eventually research what's going on because they're going to be subjected to intense inflationary pressures. And we're at the beginning of this, of wave three. Charlie Munger says, most people are too fretful. They worry too much. Success means being very patient, but aggressive when it's time. The oil market's buffer is vanishing fast, says Art Berman. The only real spare barrels left are in Saudi Arabia and the United Arab Emirates. And even those may exist more on paper than in pipelines. Exactly. OPEC Plus would struggle to cover major Iranian oil supply disruption. Here we go. It's going to get real, real fast. If all they've got are paper barrels of spare capacity and not the real stuff, we're entering this with the low strategic petroleum reserve in America. And Maybe other areas are low in strategic petroleum reserves. I know China's been building their SPRs up over there, but man, this could get ugly. JC Parrott says we keep being told real estate is expensive, but it turns out that it's only expensive when priced in funny money. When you price housing in real money, it's actually not that expensive at all. Great chart from these guys. Ounces of gold to buy a new house, and it's actually pretty dang low. That's also gold outperforms real estate even during real estate boom cycles. Lilu says knowledge compounds almost in the same way that your money compounds. In fact, only when your knowledge compounds at a faster pace, your money is safe. To me, that is a very fascinating journey and rewarding life. David says breaking Iran declares Strait of Hormuz closed. 20% of world's oil production flows through it. Black Monday question mark. I don't know. I don't know if this is just a rumor. I don't know. I think they'll keep it open. Who knows? But if they actually do close that, I mean, some people are like, "Oh, well, oil could go to 100 or 100." No, guys, we're going way past that. We're gonna blow through 100 like it is standing still. 20% of world's oil production, if that gets majorly delayed or something happens, um, they'll be rationing. I don't even know. I don't know. Crazy things will happen. Put it that way. I thought that was funny, but I'm not going to go over it. Here's a couple of charts. Uranium and nuclear energy stocks are trading at their highest level since 2008, as this is ripping higher here. That's energy ETF NLR, which is more. There's some other stuff in there. It's not uranium producers as much. New York Stock Exchange Natural Gas Index is trying to resolve a massive base. Will the bulls make it happen this next week? For XNG Natural Gas Index ready to break higher here, busting through resistance. It looks good. Looks very good. Here's crude oil futures from him. Crude oil futures just had their best 3-day change since March of 2022. Is it time for the long-awaited rotation into energy? It is. It is time. And then emerging market currencies are flirting with the massive base breakout. Yep, these all move together under the same condition. Nice cup and handle, and then we'll get the break. So emerging markets are going to crush it. The dollar is going to be the driver of all this, the weakening dollar. And then other currencies will break out. I've showed you those before. This is all set up for that to occur. And then JC Parrott says Americans don't own enough energy stocks. The S&P 500 is only 3% energy. The Dow is less than 2% energy. NASDAQ 100 is 0% energy. The worst thing that can happen to American investors is that energy becomes a leader. So that's exactly what we've been betting on. They're vulnerable, good. And that's energy versus the S&P 500. We're going to see a big move up in this. Big, big, big move. It's going to be fun. Very fun if you're an energy investor. But that's all I've got for today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specialist coupon code. We've got a question and answer session coming up at 5 p.m. Mountain Time today. So if you want to join, go join the website. Jump on the Zoom call at 5 p.m. Mountain Time and ask whatever questions. You can kind of view that, or you can see the recording later on the website. All right, guys. I will catch you later. This is Finding Value.